Perhaps you struggle to mark out those areas of imbalance. I'm going to give you an imbalance trading hack here today to make your life so much easier. And we're going to quickly go through how you can use this to your advantage as well. So on the EURUSD daily time frame, and many of you struggle and say about how you can't actually find these zones very quickly for your areas of imbalances to be able to trade from. So what I'm going to do today, I'm going to show you an indicator that you can use on the actual TradingView platform. You can search for this indicator and apply it. And I'll show you the settings I actually use as well to make this easier for you. So the actual indicator is called the FBG imbalance zones, okay, at JP. Can we just turn it on so you can see it? JP7FX, okay. Now that is the indicator used. Now it's not going to show the candlesticks like this on the chart. You're going to see zones being applied when you add it on. So what you need to do, you need to change settings. Before we go through the settings, okay, I'll go through those at the end of the video. I want to go through how you can use this to your advantage. Now, when you look at this chart, you're going to be able to see straight away, I'm just going to pen, okay, so we can see that we have these blue and red candles. Now, the blue candles are going to show you where the price, okay, is making that momentum move to the upside, where we're going to see these areas of imbalance left over. Now, the red candles are going to show you where the area of imbalance has been left over, okay, to the downside. Now, these candles will not print until you have the next candle closed after it. So let's go closer into the current price. Let's take this candlestick right here, this blue candle. Once this candle closed, okay, we then had this candle form. Now, the reason for this is once we had this candle move up, and there's a way to understand this as an area of imbalance before it even occurs. Now, there's a video which I'll leave at the end of this video as well. You can go and watch that and you'll understand how you can apply this. But this candlestick turns blue after this candle closed because this wick, okay, did not fill that imbalance. So what I mean is we can put this level there and you can see we've got a very small gap left over. That's why it's a blue candle. So that means basically we can then draw an area of imbalance, which we don't have to now because we understand that the imbalance is there. So you can see we have a leftover imbalance sitting there. Now the same for this red candlestick. Once the close of this candle occurs, again, we have the move down, the big bearish drop, and then we have this candle pull back and closes where it does with this lower high. Now, once we see this lower high, we can mark a level off that lower high. This leaves us that area between where there's absolutely no buying in the market, just selling. This is where we have potential orders left over. Okay, there are blocks of orders. I'm not talking about order block and all that rubbish. Blocks of orders left over in these areas where the market is either going to push back into to continue or it's going to use those orders to push the market through. Now, looking at this area, you can use these candlesticks without even needing to draw a zone. This is why it's very, very easy to see your zones where they are on the chart. You can keep your charts nice and clean. You don't need to be drawing all your zones. So we can quickly identify the move up here. And when we see the market coming down, we know we've got this leftover imbalance because it's a blue candle. We can quickly look at the candle and we can see there is space in between. Now, the same thing, we can look here to the left. We can also identify we had this space left over in this candle. Okay, when we see the market pulling down, we knew we had this area of imbalance. Now, you could still draw your zone, but you don't need to. We'd have our zone left over here. And we can see the market comes back to the 50% area of that imbalance and then reverse back for this high. This is how easy it is for you to use, okay? Once you understand the use of these settings, I'm going to share with you today. So look, once we see the imbalance close through, I'll share with you how you can read the imbalances quickly. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. We see the market pushing down. Now, you could draw this out if you wish, just to see price. But look what happens here. We actually push back up, okay, and we fill the high, nearly to the high of this imbalance, and then we drop back down, pull back again, and we continue down. Now, when we see this area, okay, this imbalance, let's just grab that again, pull that down. Again, we can see the market is holding at the top. Now we do just close through here, but instantly we close back to downside and we break structure back down. Then we have our next imbalance here. But this time, if we mark this imbalance out, we can identify we have the breakthrough with this candlestick. The next candle holds at this broken imbalance. That's because we have orders there have been consumed. The market's pushed through. Okay, and they'll come back to the area where we broke through. Now we also have here what I call a pre-imbalance, where we have orders left over, and that can be held as well. And that in conjunction with this is where we see that pulling back. Now very often we would see this act and leave an area of imbalance. Now this occasion we didn't, because the market pulled all the way back down to hold that area. Again here, okay, we would have had an area of imbalance, pre-imbalance, which you can learn on that video at the end of this video. But we've actually left over this small imbalance where price may want to push down to, just to grab those orders and push the market up. But when we see a push down like this, very often those orders have already been filled. So this is the simple way you can use this strategy, just by adding these zones. Now you can have them, they'll be applied to any time frame you wish. Okay, we can go all the way down. Let's go to a 15-minute here. And we can identify where the imbalances sit quite easily using these areas. So you can see this area here where we have the sweep of this low. What is that sweeping into? Can you see the blue candle? Okay, you can mark off that blue candle on its own. Just mark the blue candle. You can use the candlestick. You don't have to use the bit in between. Now we've got the bit in between there. That's the imbalance. Full fill on this push down. We swept that low, up the market went. That's how easy you can identify it. But I'm going to give you a little tip here today. If you mark up the whole candle from the move where we see the push up, you can see how that holds at the 50%. Again, that we can see the next blue candle was created was here. Let's mark that off. And let's grab that again. Okay, so this blue candle, we push into it, we hold at the low, we didn't close through, and we push back higher. Now we create the large candlestick here. And again, we can see the market holds at the 50%, pushes out, pulls back, continues on its way. Now we're looking really now for the origin of the move. So this became the origin of that move. This candle became the origin of that move. And that's how you'll be looking at using those candles. The same here from the high. This bearish candle becomes the origin of that move. This one became the origin of that move. Now we did just push through and then drop straight back. And that's how I look at applying that type of strategy, just using those origins. The same down here, look, we can apply the origin here. The market down, we did kind of hold, then we closed through and we've pushed out. And if we look at the current price, okay, we can see this was the origin move. Market pulled back in 50%, and now we've continued on the way. And then we can start looking at the next origin candle. This was an origin candle. We came back in, and then we have this one as the next origin. We pull back in, and then we have this our next move. We've pulled back in, pushed out again, and then we have this the next candle. Let me zoom in. When we have a strong trend in the market, you will see these zones hold up very, very well. Now, I'm not even marking out the actual zones in between here. I'm just marking out the whole candle itself. Okay, so you can see that we've already identified the candle itself by using what? By using the indicator. I'm going to share with you at the end of this video the settings you need. I'll give you these candlesticks you need. Okay, then we can use the full candle, and you can see the market pulls back to the 50%, pushes away. Pulls back to the 50%, pushes away. Pulls back just above, okay, push away. Next candle, we pull back to 50%, we push away. Now, when I say pull back, I mean before we even see a break of structure, this can happen. Okay, so we can see this one moves sideways, pushes away. This one pulls back, This one pushes out, okay? Move sideways, pushes away, move sideways, we push up. Again, this moves sideways, but we push away. So look, you can see we have this one now formed. It's not the best location, but we can draw it. I like to see these actually form with a swing low. Okay, this hasn't got a swing low. These were swing lows in the market. This formed from a swing low. We could say this forms from this swing low, this push up, but we rather see at the beginning of the move. So that's a quick strategy there for you to use the candlesticks themselves, okay, and start reading the price in the market. Now, how would you use it? When we see these pullbacks, you simply go to lower time frame. So let's say you was using this on a 4-hour time frame, you go down to 15-minute and look for the entry. If you're using this on the 15, you can go down to the 1 minute and look for entry. If you're on a daily, you can go down to a 1 hour and look for your entry. Very, very simple technique. So that's how you can use the actual method itself. Now let's look at the settings that you've been waiting for to understand how I apply all these candles like this. So understand and quickly find those zones. What we'll do is we go into the actual settings. Okay, so you can see I've got this set to 0. I've got my 2 colors set. This is set to 0. Okay, so show the bar color. You can see if I turn this off, they disappear. So that's the bit you need to use. Okay, so I don't actually need this on at all. You just turn this off. But if I was to set this to 2, you'll see that we should have some zones. But I haven't actually got them marked. So I've got them turned off on colors. So but we just leave this as 0. They're gone now. And that's it. That's all I've got. And then I've just got the color boxes and then all charts. That's all you need to do. And that will give you these colors on these candles you need to do what I've just went through with you. Look how much more simplified this is going to be for you. No need to mark up all those marks. We can see, looking at this chart, briefly, quickly looking at the 4-hour time frame here, we can see where the market's pulling down. We can see the momentum moves where the red candles are appearing. Okay, momentum moves to the downside. Then we shift, and look what we shift with, a blue candle. We shift through structure with blue candles. We do start to pull back here with blue candles. We move sideways, and then we have the next breakout. That confirms the bullish bias, okay, the momentum. So we know the market's going to want to come back to these candles. Now, we don't always have to come back to them, but you can see we pull back into that candle, we push away, and then we actually pull back into this candle as well. And then we're slowly now looking up, we're going to push for this high. So that's how you can use this imbalance indicator. Much easier for you to find these zones. And I'm sure it's going to help you on your trading. Now, if you want to join that absolutely free community I went through earlier on this video, you get those daily markups on the USD. You can join because the link is going to pop up right now.